Yeah, let's try it again. Okay, is that recording?
I think so. Yeah.
How do you guys see that? Do you see somewhere with it? I see it up here. Okay, gotcha. All right, there we go. Okay, so let me share my screen, okay, and then I'm going to open up an Excel file. Let's just do that. New. Okay. So I think that the question you had was about moving from one equity position to another and the different things that happen when you do that, right?
Yeah, like how do we know, because I remember from previous office hours you mentioned dividends are always negative because it comes out of the net income. But then
Yeah,
I was still
that's right.
how do you
Okay, well what I would strongly suggest that you guys use Excel, because I think it really does help. You know, you don't have to, but I think it's really helpful in understanding how this problem works. So let's go ahead and do an example in Excel here. Okay, make it a little bigger. All right. So we've got a beginning balance of equity. Let's say our equity at the beginning of the year is $1 million.
Marilyn?
Yeah.
This is April. I actually have a question regarding the homework 4.7 and 4.9. Should I ask you now or after this?
Well, I had somebody who was just asking a question on a different problem. So if you want to just wait, and then I can take your question after.
Okay, great. Thank you.
Okay. So so let's say that we're our beginning balance in our equity account is $1 million. Okay, and we're
it's still from your previous sheet.
Sorry?
It's still from your 5.9 or 5.8 example sheet.
Yeah, I'm just doing a new example.
I see.
Yeah, I'm just going to do a new example.
It's not changing.
Okay, so I think it's the same concept, right? Okay, so what you know, what you want to do is you want to understand what your total change is first, right? So you always want to know what's happening in your total equity, right? So in this case, you know that your beginning balance is $1 million, your ending balance is 1.5, that you've changed, your equity's changed by $500,000 for the year, okay? What's important then to understand is like there's 3 things that can change, that can cause equity to change, right? Do you remember what those 3 things are? Net income, right?
Dividends and stock sales. You're not sharing the Excel sheet. It looks like.
Am I not sharing the Excel sheet?
That's what I was saying. It's from the previous problem.
Oh, I'm sorry. You're not seeing it, is what you're saying.
Yeah.
Ah, okay, got it. All right, let's see. Why is that not working? Let me close this.
Oh yeah, there we go.
Are you seeing, what are you seeing now? The previous one?
Yeah, this is the 5.8. Okay, now it's a fresh sheet.
Okay, let me go ahead. I don't know why it's not showing you the work what I'm working on. That's very strange. Okay, let me let's go back.
I think somebody's commenting here.
Okay.
Oh, you need to close. Okay, never mind. Got it.
Do I need to close the prior one? Can you guys
got it
now?
We can see it now.
We see
Okay.
it. We see it.
Because we see something that's labeled equity.
Yeah. Okay. Great. All right.
Thank you.
I don't know why that's strange. I guess I can't have 2 sheets open at the same time. Okay.
Yeah, we see that.
Yeah.
Okay. So here's the beginning balance of $1 million. Ending balance of 1.5. Change of 500,000. Three items in equity that changed: net income, dividends, and common
stocks.
Okay. So if now if you have dividends, if you actually pay out your shareholders in dividends, that means that you're distributing your equity balance out to your shareholders. Okay, and that happens in the marketplace. There are companies who distribute their profits out to their shareholders in the form of dividends. If they have too much cash, or if they just want to share their profit with their shareholders, which their shareholders expect, then they will distribute that. So they're always going to be negative. Okay, so it will always be negative. So if you, in this example, if you have $500,000 in dividends, that you're distributing, right? Then essentially what that means then is you've taken your equity down by 500, right? And maybe it's good to put dividends first. That might make it a little bit easier. Okay, go ahead and put it here. So
Visually.
instead, I'll take the net income and put it down below. Okay. All right. So what I'm going to do here is I'm going to do accumulated value, cumulative. Right? Cumulative. I think it's just one of them, right? Okay. So what that means is I'm going to add up as I go. Okay. So I've got $1 million of equity. Then I'm gonna distribute 500,000. So my value in my equity account now is 500. Okay.
That's a variance.
I'm going to sell some common stock. I'm going to go out and say, hey, does anyone want to buy some stock? Let's say that I was able to sell $250,000 worth of common stock. Okay. So that actually was an increase to my equity balance, right? So again, I'm going to go over here into my cumulative, and I'm going to take my 500 that I have in there, and then I'm going to add the 250. So now I have 750, okay? In this example, right? In my balance, right? Well, I know that my equity ends up at 1,500. So I have to figure out, what is it going to take from 750 to 1,500, right? What am I going to need to have in my net income in order to achieve a 1,500? Well, I'm going to have 750,000, right? So it's basically like you're solving for X, essentially, right? It's kind of the math, right? I think when we did the last problem, I think what gets confusing is when you start subtracting things and you're maybe subtracting the wrong way. So what I would suggest that you do, if you've come up with a formula on how you got to your net income, because I believe that's what the problem asked for, is what is the income. And I think some people missed that one, because I don't remember exactly why you missed it, but it may have been that you subtracted instead of adding. And so what you always need to do is when you come up with your answer, just do the math. Say, okay, I'm going to start out with $1 million. I'm going to add, in this case, I'm going to subtract, right? I'm going to start with $1 million. Sorry. I'm going to subtract from the million, 500,000, right? I'm going to subtract it. So then that answer would be minus 500. Then I'm going to add 250, right? So that answer then is 750. And then what do I need to add in order to get to the 1,500? Well, I need to add another 750. And then you should be able to do that math, and if the math works, you got it right. Okay? What's happening is you guys were making all the equations and subtracting it, but you didn't go back and do the math to see if you had it the right way. Okay? So I think that's where you got a little bit stuck. All right? So if you always want to go back and just double check that you got it right. By doing it the way that I've identified, though, it helps you because you can understand sort of where you are in this transaction, right? And sort of what Patty is subtracting in order, because the total change is 500, you can see, right?
Yeah.
Any more questions on that one, on the equity question? Okay, April, did you have a question?
I think she said 4.7 and 4.9.
Okay. Let me see if I can see, because again, when I'm in the Excel, I can't really see.
Let me share my screen, and then I can. Let me see how I can share. You cannot start. Oh, so I think I need you to release so I can share my screen.
Yeah, let me see if I can do that. Hold on a sec. Stop share. Okay. Can you take it now?
Okay, so let me pick up one. Give me a second. Okay, this one. Okay, can everyone see my screen?
No.
So some of my windows.
So we just see your foggy face.
Can you see my screen?
No.
No? Hold a second. Let me try one more time. It might be slow. Share.
Okay.
There you go.
Wait. Oh,
Okay.
Can you see my screen?
Yes, now I can.
Okay, so this is 4.9. And my question is your transaction 10. Well, first of all, the formula is wrong. It should be this one added this one. So I'm trying to understand when you have transaction 10 over here, that is, I think it's supplies. You consume some $10,000 of supply inventory. There's no transaction over here in liability and equity. So that's my question. What do I miss something over here?
Yeah, so it's if you look down below on cell M33.
Okay, so this has to come up over here, or do
It's a P&L item. So essentially what happens is you buy inventory, you keep it on your balance sheet until you use it. And when you use it, then you have to record it on your P&L.
Okay, so do 10,000 over here, or we just keep it over here?
So you have to take it off your balance sheet, which is why you see negative in cell M7.
Yeah.
And then you have a positive in cell M33 because you're using it. So now it's an expense.
So over here need to be negative 10,000.
Only in cell M7.
Only M7. So does this mean when you have balance sheet, you always also have to look at income statement in order to get balance, because our total liabilities and equities is zero. It doesn't balance.
Balance sheet doesn't mean that every transaction you make has to balance on the balance sheet. What balance sheet means is your final transaction has to balance. So whenever you look at the balance sheet, you're going to see, right? Because what happens is the entry that you're making is a double entry, right?
Mm-hmm.
You always have to make a debit and a credit, okay? And so what you're doing is by making the reduction to your asset and an increase to your expense, eventually that will flow back through to your balance sheet in your equity section of your net income, because it's an expense on P&L, right? So that means on your P&L shows up in your net income as a reduction, okay? But you're waiting till the end of the fiscal year and you accumulate all the changes on your P&L and then you roll them into your balance sheet through your net income. And that's when everything is going to balance if you do it right.
Okay, got it. Okay,
so that's why you have to make a complete
okay.
full year, okay? You have to make a complete full year including your net income, and then you'll make sure you balance. Yeah. You could also do it.
Okay. So the key is not every transaction should be balanced.
You could also do it as a point in time. Like you could do it on a monthly basis, but you would have to roll your income into your balance sheet at that month end. And if once you do that,
Okay.
then you'll balance. Yeah. Does that make sense?
Okay. Thank you.
Yeah.
Yes.
You
Okay.
okay.
And then next question is the 4.7.
Mhm.
So this is, if you look at column Q to U, I kind of did it for myself. So I would try to like my B is carry on from A, C is carry on from B. But when I'm looking at your answer, you seem that each transaction going back to the very original. So my question is, if you have on our midterm, what would you expect? Are you expecting us to carry that transaction based on the previous carry on, or always go back to original? Because I kind of see your question C has a mix B and A.
No, they should all be independent. They shouldn't be carry forward. They should all be 100%.
Okay, got it.
If it's carry forward, then it should say use prior example and then add something to it. Otherwise, yeah.
Okay, then your answer for C, you shouldn't have the surprises over here.
Let's look.
This is carry on from B.
Yeah, let's check. Because let's look at C. So let's you said which problem was 4.7? Okay, let's look.
Yes.
4.7.
Thank you.
Let me read it. 4.7. Okay. So you're saying it's C, right? That's the problem.
Yeah, the C.
Okay, refer to the transactions pertaining to balance sheet using this data. Okay, so I think if I go back to the Bayshore Radiology, that is on, let me find it quickly in the book. I think that is on pages 144, I believe, right? Uh-huh. Yeah. Okay, 144. Okay. So, oh no, wait, no, I think I'm in the wrong section. Hold on. Is that right?
Sure.
I have this on my lap. It's not that can see. So Bayshore Radiology. Okay, here we go. There's multiple questions here, right? Purchase equipment for cash. And this question is C, which is the 50,000 in services provided. Okay.
Yep.
What you're saying is that it shouldn't be any supplies in C. Is that what you're saying?
Yeah. Uh-huh.
Mm-hmm. Yeah, I can. You want me to? I'll take a look at that. If you think it's not right, I'll take a look at it. I don't need to do it right now because I have to go back and look at the read the problem.
Okay.
But
Okay. Thank you.
It.
But
Yeah.
you kind of answered my question. Each transaction should be independent, so that answers my question. I'm just kind of worried about the midterm. Yeah.
Yeah.
Okay.
No worries. Yeah.
Thank you.
Yeah. I'll definitely take a look at that one and let you know. Okay.
Okay. Thank you.
All right. Did you have anybody else want to look at something in particular? Oh yeah, I'm looking at C is for transaction 4, right? Transaction 4 does have supplies, right?
Oh.
Transaction Transaction B has a surprise,
Transaction
but
4
transaction.
is isn't that number 4
But
that
if you look at stuff from problem, I think page 144, start from 2. It depends on where you start. You're going to start from 2 or 3 or
No,
even 1.
I think what happens is they're asking you to start from the transaction. It gives you the number, right? Number 2, number 3, and number 4. So maybe that's confusing because see, there's a
I see.
3 and a 4
Oh.
Yeah.
on the page. So maybe they should have said
Oh, I see.
these are
Okay.
all different transactions. So yeah, they're asking you to
Got
start
it.
with this transaction at the bottom of page 140.
Yeah.
Okay.
Okay. Got it. Thank you.
Yeah. That must have been a little confusing. Yeah. Sorry about that.
I had a question overall to how to best study for the midterm. Would it be helpful for us for the problem sets? Would it be helpful for us to more concentrate on practicing chapter 3 and 4, the problem sets? Do we have
Yeah. I'll just be very clear with you guys. I think I've said this before, but I'm happy to say it again. The problem that's going to be on the midterm is going to be very, very similar to 4.9. So if you guys can go through 4.9 and maybe, you can, as a group, maybe you can come up with a hypothetical problem. And if you all try to solve it, let's see if you got it all right, if you all got the same answer. And if you can do that, and I also am going to ask you to look at the cash flow statement, right? I want you to be able to think about the cash flow statement as well and how that gets put together. That's what's going to be on the midterm. Okay.
Thank you.
Is that midterm from chapter 1 to chapter 4 or just chapter 3 and 4?
Yeah, no, it's from chapter 1 to chapter 4. So it's going to be multiple choice. The first section, it's going to be timed multiple choice, very similar to your chapter 1 and chapter 2 quiz. And then the second part of it will be an Excel spreadsheet. And then you're going to be asked, to complete a P&L balance sheet and cash flow. So if you, as I said, if you guys can, do the problem 4.9, if you understand how that problem works and you can do that on your own, then you should be prepared for that portion of the test.
Okay, so chapter 5 is not included.
No, chapter 5 is not included in the test. No.
Professor, this is Bhupinder. I had a quick question about 4.9.
Sure.
I was going crazy because I completed this problem after, rewatching your office hours. And in the spreadsheet with the numbers that you generated, the beginning, like total liabilities and equity and beginning total assets matched the ending total assets and total liabilities and equity. So I thought since like the ending one here for 4.9 is 2.5 million instead of 1.5 million, I thought I did something wrong. Now, is that because of the 1 million here in net assets equity?
Maybe
like, why is it that it's different? But in yours,
go to the problem and let's take a look at it because I'm not sure. I would need to see it so I can answer your question here. So let me close a couple of these other ones so that I don't do the same thing I did before and have too many things open and get confused. Okay, I'm going to go ahead and take the share again. Okay. Okay. I don't know why it's doing that, but okay. Because everybody still see, you guys seeing my Excel spreadsheet?
yes.
Okay. I have a lot of Excel spreadsheets, so I have to find the right one. I use them all the time. Okay. Okay, so week 4. Let me see if I have my problem. What did I do with mine? Here we go. Okay. Yes. Okay. So,
Right there. So on P, so see on your, is this the problem that you worked out with your
yeah, this
number?
is my example problem. I don't think this is the one from the.
So maybe I couldn't, you know what, maybe because maybe my eyesight is just bad. I thought those numbers, so in D11 and then D21, right, total assets and total liabilities, I thought they matched what was in the ending, total assets and total. So what's in P11 and
No, they don't.
I thought
They
all
don't.
of those are supposed to match.
No. No.
Okay. So it's
Just
okay.
think about it. Yeah, let's just think about that for a minute, because what we're saying is you have a business, right?
Mm-hmm.
Say at the beginning of the year, your business is going to have a certain number of sales and receivables and cash and payables and what have you, and that's going to be where you start the year. Where you end the year could be a completely different place, right? You might have more cash, you might have less cash, you might have more receivables or more payables. I mean, so it's really going to be different, correct?
Okay.
Be the same. And all these transactions that happened across the year are going to help you dictate what your ending balance is going to look like.
Got it. Okay. Yeah, I don't know what. I think maybe just my eyesight during that time, it just looked like the numbers were the same, but now I see that it's actually 1.6 million in the ending and the beginning was 1.1. So, okay.
And I don't know if there was another example you might have seen. Like this is a different one that we were working on, but yeah, I don't know.
Like I just remember at one point you were balancing out the numbers and you were making sure they were matching and you were going back and forth. So I think I may have just got like a little confused during that time, but
okay,
thanks for clarifying that.
Yeah, no worries.
Can we use 4.9 to go through the cash flow statement one more time? Because I tried to do it myself and then my result didn't really come out right.
Okay. All right. So so do you? Let's see. Why don't do you want to do a whole new problem on 4.9 from the beginning?
Sure.
Well, yeah, or I can show you my cash flow statement. It didn't add up right.
Well, what I want to know about is the class.
Yeah. Okay.
What class like to see? Because I think it's important that you know that they help as many people as possible at once. Is there another problem that anyone would like to see, or would people like to see to go through another example like?
I think I vote for a new sample.
Okay.
A new problem.
Anybody else want to see something different?
As in like a new problem with the same format?
Like 4.9, but a new problem, right?
Yeah. Anybody have a problem with us doing another example like 4.9?
No.
Okay. All right. Great. All right. Let's go ahead then and do another example of 4.9. So what I'm going to do, is small if I can. Okay. All right. I'm going to go over here where our transactions are here. Okay. I'm going to make up some numbers. Okay. Numbers in here. Let's see what we can come up with. All right. Whoops, that's too much. We don't want that much. Okay. Salaries earned. Okay. Salaries paid. Annual depreciation. Okay. Bank loan. All right. Cash collection. Billings. Let's see. Let's do bad debt. Right now I have it at 10%. Let's do it 15%. And paid on bank loan. Okay. Maybe I'm going to change this and say our bank loan requires us to pay annual interest or annual, not interest, but the principal. Okay. And maybe we'll say that our bank loan is a 5-year loan. Okay. So we have to calculate what that is. All right. And let's say our depreciation. Maybe we can make this a little more complicated here, but let's say that we, let's see, do I have a balance here? I do. There's $500,000 worth of equipment, and we've accumulated. So I'm going to say that our original asset purchase, I'm going to put that example over here. Our assets, we bought some equipment. We bought it for $500,000. Okay. And that equipment is depreciating over, let's say, 10 years. Okay. And I'm going to just put that over here. And we've got year 1, year 2, year 3, and so on. Right. And let's pull that down just so we have a 10-year depreciation schedule. Okay. So, and if we are depreciating that $500,000 equipment over 10 years, that would be dividing it by 10, right? And then we would say the balance would be the 500 minus the depreciation. There's our balance, okay? And we're gonna $50,000 will be what we're using every year to depreciate that item. And then we're going to subtract our depreciation every year to see what our net balance is, okay? So this tells you what your depreciation schedule looks like, essentially, is what this is, all right? So then if we're saying that we have a 10-year useful life of the asset, okay? And that's what we're going to be depreciating, then that would be, wouldn't it? Okay. So if I were to say that we have a 10-year useful life, okay, for our asset, which was purchased at 500. Is everybody following that?
I had a question. So the numbers that comes after the 10 years, is that considered the salvage value?
No, this is basically your every year what your net value is. Okay, so I'm just going to. This is your net value, right? Net of your accumulated depreciation. This is your purchase price, right? Your price. Here it is, price. Okay, here's your price. There is here's your depreciation. And then there's your net value. Okay, so it's basically taking your original price less your depreciation, and then every year you're doing the same thing. You're taking your value less your depreciation, and so on and so forth until you have no more depreciation left. And every year this value hits your profit and loss statement, hits your income statement as an expense. Every year. So that value, that depreciation here, the annual depreciation that you have to make, is always going to hit your income statement as an expense. Okay. So if you look at your depreciation, which I spelled wrong, depreciation, that's going to be your $50,000 right there. Okay. So that's basically that one. All right. So let's go back here for a sec now. Okay. And then we've got supplies used in patient care. We'll say 20. Okay. All right. Now the bank loan. Let's look at the bank loan just quickly. We've got a 5-year bank loan. This is a little bit new, right? 5-year bank loan. So we have to pay 1/5 of that off every year in principal, right? Not even including the interest. So that would be what? What would be 1/5 of 500? Right? So we have to pay $100,000 on our bank loan. So that'll be another item that we'll include. Okay. So what I'm going to do is I'm going to go through here and I'm going to clear all this out, right? Because we don't want to get confused with our old answers, right? That will be very confusing. So let's take all of this out, right? Okay. And we'll clean out our P&L as well down here. Okay. Okay. And last but not least, let's clean out our balance sheet. So we had a beginning balance of 400, which is coming from here. That's our beginning balance. So this is our cash flow down here. And I'm just going to get rid of everything else down here. Okay. Okay. So delete. All right, great. And then there's our ending cash. So that's just simply a formula. I'm not going to change that. It will help us calculate it when we're done. Okay, so let's just go through this. Transaction number 1. Okay, let's see here. Transaction number 1. Okay, so our first transaction says that we have $1 million in patient billings. Okay. So where, did anybody want to help me put this together? Where does that go?
Accounts receivable.
Okay. So we put $1 million there. And what's the offset? Well,
It automatically filled into
Oh,
revenue, right? Patient billings, right? So let's put it down here. So that's going to be here, right? The patient billings. That's how much money we earned in revenue. And that's our accounts receivable, okay? Any questions on that?
Can you scroll to your left more so we can see the beginning cells, like the starting cells?
Yeah.
Because right now I can see cell P,
Oh.
the ending balance, that column, but I can't really see the where you are.
So then maybe should I make it a little bit smaller? Maybe would that be better?
I wonder if we can shift from E to O. Oh, yeah.
Is that better?
Yeah.
Can you see this now? Okay.
Majority of it, yeah.
Okay.
Can we look at your E21? You shouldn't have 1 million there. E21.
Income is
My formula. This must be an old one because the formula's not working on this one, is it? Okay. Thank you. Yeah, so my equity should be here plus this. Yes, thank you. Okay, great. All right, so let's do purchase supplies on credit, okay? So purchase supplies on credit. So that's the second transaction that we have here, okay? So supplies would be here, right? We're purchasing $600,000. We get an inventory, supplies inventory.
Credit, would it be accounts payable?
That's right. That's exactly correct. So let's put that here. Okay. So we're adding an asset, an inventory, and a liability as a payable. Okay. All right. Now we have salaries earned. Okay. So our workers, they work hard. Okay. And they earn, in this third transaction here, earn, what is it? $550,000 in salaries. Okay. And that, what's the other side of that entry?
Other payables.
Yep. Okay. Put it there for now. Okay. And then we pay them $450,000. So where does that go?
Cash.
Yep. So then we have negative cash, right? Because we're paying cash, right? And then what happens to
Other payables.
it goes down, right? Because we don't owe them anymore. We just paid them. So that goes down. So it leaves a balance there for them $50,000 because you net the two, right? But since we paid them, we can reduce our payables. Okay, does that make sense?
I have a question. When's the situation you have this salary earned?
So why do we have salary earned versus salary paid? Is that what you're asking?
Uh-huh.
Yeah, so what happens sometimes is you have a counting period that is not the same timing as your payroll. So you have to close your books and you might still, you might owe people money, right? And so there may be timing difference between your payroll and when you close your accounting books. And so that happens sometimes at the year end as well, you know? So you might be paying your payroll on like the 20th, I'm sorry, on the 5th and the 20th of every month. But let's say that your year end ends on the 25th. So you might have a few days where you haven't paid them at that year end, and you will pay them the next year. So you still have to show on your books that you owe them that money because they earned the liability, okay? All right, so.
Thank you.
Okay, no worries. Then we have annual depreciation, which is our next item. Annual depreciation is where, you know, we have to go through our assets here, right? And we know that our annual depreciation is $50,000. We calculated that already. And then we have our depreciation on our P&L. That's an expense. So we're expensing that to our P&L every year, $50,000. So now that shows up there, okay? Any questions on depreciation? What I'm going to do here, just to make it easier, is I'm going to make it a negative, okay? I have depreciation as a contra to the asset. So we have fixed assets of 500, depreciation of negative 250. So the net balance then is 250. So I'm going to go ahead and leave that as a negative 2. Bank loan, 500. Okay. So what is it? How is that going to hit my balance sheet? Bank loan.
Cash.
Yep. I get 500,000 in cash, right?
Notes
Notes payable.
What's the offset to that?
Notes payable.
That's right. Notes payable. Right. All right. So that doesn't touch my P&L at all. That's basically how my financing my organization. It doesn't hit my P&L. So let's go now to cash collections on billings. So we know that we have in accounts receivable total beginning of the year and current, we have $1.5 million. Okay, and we're getting paid $100,000 on that. So we get what do we get? $500,000 in cash, right?
Right.
And then what are we doing? What are we reversing, or what are we adjusting for?
Accounts receivable.
That's right. So we're going to take our accounts receivable down, right? Because we got paid, so those accounts receivable are no longer active, so we can reduce them, right? And then last but not least, we're going now to the estimated bad debt. So we're estimating that we have bad debt of $150,000. So bad debt goes here, allowance for doubtful accounts. So we're going to go ahead and do that negative again. It's a negative asset. We're taking our asset down, essentially. We're saying we don't think that we're going to be able to collect all of those receivables. So we're reducing them by 150. Now, where is the other side of the bad debt entry?
the revenue.
That's right. Can you explain why it goes there?
Because you sort of anticipate not getting that money.
That's right.
From the money you generated in the revenue
That's
as part
right.
of your core operation.
Exactly. So if you didn't take it out of the million, then you'd be sort of overstating your revenue. You know that you're not going to earn it. You need to take it out of your revenue too, right? Okay, good. And then we're going to pay on our bank loan. Okay, so what would that entry be to pay on your bank loan?
Negative cash and negative notes payable.
That's right. We reduce our notes payable. That's right. Okay. And last but not least, supplies. So we're going to use $20,000 of supplies. Okay, so how are we recording that?
Negative supplies inventory.
Yep.
And then we have to add it under supplies.
New P&L, right?
Yeah.
It's expense. Exactly. Okay. Great. So if we've done it,
I have a question.
yeah.
Sorry, I have a question. So when you paid bank loan, oh, I see. Hold on a second. I got an amount wrong. Okay, no problem. Sorry.
Okay, no, it's fine. It's fine. So what's interesting here is if you look at our balance sheet, we've got $2,485,000 in assets, and we've got $2,205,000 in liabilities and equity. So are we in balance?
Oh,
We're
No.
not in balance. So how much are we off? It's this 280 right here, right?
what
I already did the math. I have a little item here that tells me how much we're off. So what would you guess our net income is?
280.
You think it's right? Let's look. Oh, wow. Look at that. Great. Let's put our net income in here. So close out our net income to our balance sheet. Look at that. Isn't that beautiful? Okay. So that's basically how we do that. Down to our cash flow. Okay. So we know that we had a beginning balance cash right here, 400,000. Okay. We know that our ending balance is 850, right?
Okay.
Okay. So that's here. I just put it here so we can check and make sure that our number is the same. Okay. So first, let's go ahead and take our net income. That's the first thing we put on our cash flows. We put our net income, 280. Okay. And then what we do is we add back our depreciation. And I think this gets people confused sometimes because you think, why are you adding it, right? But when you think about it, if we didn't have any depreciation at all, I'm up here now in the P&L. Let's just say I take it out. What happens to our income when you take out the depreciation?
Let's increase the net income.
It increases, right? So that depreciation is actually decreasing your net income.
Mm-hmm.
Add the depreciation back. What you're really doing is you're subtracting it. You're subtracting the expense. You're saying, let's assume there was no depreciation. Okay. And that's why it gets a little confusing because it's saying you're adding it, but really what you're doing is you're subtracting the expense. Okay. And it's an add to your net income. All right. So by actually adding that depreciation back in, you're giving your income another $50,000. So now your income's $330,000. Okay. So you're essentially eliminating the impact of the depreciation. That's another way to say it. Eliminating the impact of depreciation. Okay? Does that make sense to everybody?
Would it be helpful to think that for depreciation, because it's a non-cash expense, that you would subtract
That's right.
it?
Because what you're doing now is you're on your cash flow statement, right?
Yeah.
So what we're doing in our cash flow statement is we're getting rid of anything that's not cash. We're trying to reconcile. And so depreciation is not cash. So we start with our net income, and then we take away anything that's not cash. Depreciation is not cash, so we're going to eliminate it. All right? And then what we do is we go to our receivables. And we say, okay, what's changed on our receivables? And what we can do is we can add up all our receivables except for the cash. Okay. We're actually reconciling cash, so we don't need to do that, but we can go ahead and add in all the changes to assets that we did not already record in income. So we recorded our receivable. So I'm going to go ahead and take everything else. So I'm going to say we added, I'm going to add up, I'm just going to add up all of this, all these different items here, okay? And that is adding up to 330,000, okay? All these different items right here. Okay, the only thing that I'm going to probably not include is the depreciation. Okay, so I'm going to take that out. So I know it gets really confusing because you know, what do I include and what do I not include? One other way to probably do this is to just go ahead and make a variance over here. And if you just go ahead and say what changed, I'm going to go ahead and make a variance here to show what changed for all my different items, okay? And I can include everything because I know my total assets changed by 1,330,000. My total liabilities and equity changed by 1,330, okay? I've already recognized my net income and my cash flow, all right? So I'm not going to recognize that. And actually, that's this. Let's just go ahead and say I already recognized that one. I already recognized my depreciation change, which was this one, right? So I'm not going to take that one again. But I'm solving for cash, so I'm not going to take that one. But I'm going to take everything else. Okay, so I'm going to take this 350. I'm going to take this.
Would you also take out that additional 50,000 under that first highlighted 50,000?
That's the sum. This is the sum. Okay, so this is a total net. So so I have to be careful with that, right? We have a subtotal here under accounts receivable. That's a subtotal. This is a subtotal net of depreciation. So what you're picking here are only those things that are true changes. So I'm going to take this one because it is the sum, and then I'm going to take this one. Right? So those two items are the items that I'm going to put in my cash flow. In a different color, okay? So those two things will be 930,000, okay? So let me go ahead and put those in. I'll go ahead and add the 930. Okay, and then payables. Let's do the same with payables. Okay, what's changing in payables? We've got this change of 1,050,000, right? I have a feeling I made a mistake, but I'm going to kind of let myself do this just so that we can see if you guys can help me figure out, okay? So liabilities, I'm going to go ahead and take the whole thing because that's what we're saying, all of it, right? Okay. Now, one of them is a positive and one of them is a negative. And I know that's a little bit confusing because the cash flow statement can be very unintuitive. But basically, when you have changes in receivables, if the receivables are increasing, then your cash is decreasing. If your liabilities are increasing, your cash is increasing. Okay? Now, let me explain why that is, because it's very unintuitive. Okay? Well, the reason is because what we're saying is when your receivables are getting higher, you don't have cash. You have instead receivables. So it moves the opposite way. If your receivables were lower, that means that you would be getting more cash. Okay? So it's the movement of the receivables move in opposite ways to your cash. The liabilities is similar. If you have higher liabilities, that means that you haven't paid anybody. So if your liabilities are low, that means you've paid out in cash. So again, those are kind of not always intuitive. And the net change there between the two then is 104. Okay? So then financed is the last item. And so what I did is I added my notes payable into my liabilities. But if I want to keep that out separate, then I would only take these two items for my liabilities. So I'm going to break it out. Okay, I'm going to break it out into these different categories. this changes in payables will be my change in accounts payable, which is 600,000, and my change in other payables of 50. Okay. And then I'm going to put that I have a bank loan, and I received net, I've added $400,000 to my bank loan. So when I look at that, I can see that I had originally $400,000. I had net income of 280. I added back my depreciation. I had $930,000 that my receivables went up. So that means I didn't collect cash on them. I had $650,000 increase in payables, which means that I didn't have to pay cash out. I received $400,000 in my bank in a loan. So my net cash that I made for the period that was increased by $450,000. Okay, that's my net cash. And then the ending cash then would be adding the beginning and the net to give me my ending, and there you go. There's the 850. So that's how you do the cash flow statement. Okay. I know it's a little bit challenging, but take a watch through again and just make sure that you know your different pieces are there, right? It's the changes in your receivables here. It's the changes in your payables, and then it's any kind of debt that you have. Those are the three pieces. Okay. All right. So let me pause and see if anyone has a question about that.
I have a question. This is April. Can we go up on your balance sheet? I wonder when's the time any transaction that you will record your return earned on your balance sheet? On row B19, what would be a case that you will have return earned over there?
Oh, retained earnings, right? Retained. Yeah. So yes. This balance here is probably, it depends what kind of business we have, but this balance is retained earnings is what it is, right? Retained earnings means prior year income.
Right. So but I'm just thinking. Okay. So the return earning is from the previous year. It's not like during the transaction. I'm just trying to thinking, will we have any transaction that you will have return earning?
Yeah, it's retained earnings. And no, so when we roll our P&L over, when we look at our, this ends up being our beginning balance for the next year, then our retained earnings become the new number of 985.
Ah, got it. Okay,
so it just keeps rolling over every year. So basically this means at the beginning of time, you earn $700,000 in your organization, right? So that's the same equity that we did before, as like your beginning balance of equity. And then, you can have net income, you can have dividends, you can have common stock. Those are things that change, but this was your beginning balance, essentially.
Got it. Thank you.
Oh, you're welcome. Okay, so it's 9 o'clock, and I know I just want to ask one last time, was anybody else have any particular question that you want me to go over before we end the call?
Very helpful.
I think you guys can do this. I don't think it sounds like you guys have a good grasp of it. I'm actually very pleased.
I do have a quick question.
What was that? I didn't hear
have a quick question.
Okay, yeah.
On our exam, are you going to give us a spreadsheet similar to this, or do we have to create it from scratch?
Yeah, it'll be very similar to this.
Okay. And then I also noticed that it said on our list of things to do, it said midterm part 2 to turn in. Was that, what's that about?
So the first part of the midterm is going to be an online.
Okay.
First, like multiple choice and true and false, very similar to quiz 1 and quiz 2. And then your second part will be an Excel spreadsheet that you've given. You'll have access to once your exam is open.
Okay.
It'll be very similar to this, and then there'll be questions you need to answer, and then you need to send it back in within this certain amount of time, because it's a timed test.
So once you open the document, I assume your time starts then?
Yeah, well, your time actually starts with the online.
Multiple choice.
Yeah, the online test. So you'll have a certain amount of time for both of those components.
Okay.
So you want to get through the online, and then you want to pick up your Excel file, complete that, and submit it within the total time.
That makes sense. And then our multiple choice questions, is it going to be like 20 or more? Like, what's the ratio?
Oh goodness, how many do we have? I think they're about the same as the quiz. I don't think they're a whole lot.
Okay.
But I honestly don't remember. I can take a look, but
No, it's okay. I just kind of
Not
want
gonna
to
be
get
a
an
whole
idea.
yeah,
But the quiz, the part 1 is on chapter 1 through 4.
Yes, right. But yeah, it's going to be on 1 through 4. So there will be some questions on the multiple choice and true false from chapters 3 and 4. I think they're going to be more conceptual questions, obviously, because they're not problems. Okay, the only problem that you'll have to do is the actual building the P&L balance sheet, cash flow. But they might be conceptual questions from some of the chapters, the 3 and 4 chapter.
Okay. Thank you for clarifying.
Malik, the Excel sheet, is it already built, like the calculations are already built in, or do we need to figure those out? Like on the ending column.
It's very similar to this one.
Okay.
So it's important to know that, April found a little mistake, right? And a couple little mistakes that she pointed out. So make sure that you check everything, right? Because, if there's a mistake on the formula, you'll still not get the point, right? So even though there might be formulas there, please check them. Make sure that everything's adding correctly, okay?
Okay.
Sounds good.
Okay, well, good luck, everybody. I'm sure you guys are going to do fine. Send me an email if you want to, if you have another question. I know I'm pretty busy over the next, evening. So I'm going to have a lot of time tomorrow for a call or to check in personally, but I can definitely respond to email.
Okay, thank you.
Thank you.
Thank you.
Okay,
Have a good night.
Thank you. Thanks for checking in.
Thank you.
Okay, good night.
Thank you.
Bye.
Okay, bye-bye.